If they win, we win. We really want to find people who take that partnership seriously and have really good alignment with Baylor University. So we go deep. We want to be a good LP too. How can we serve you?
Welcome to The Alternative Investor, the definitive show for investors seeking private alternative investments. Here's your host, Matt Johns.
Today, I had the distinct pleasure to chat with Renee Hanna and Jin Dingmore from Baylor University's Endowment. Over the past few years, their work has gained a national spotlight, with returns that have surpassed some of their most impressive counterparts. While Ivy League schools are known for having some of the largest and best performing endowments in the world, Baylor's endowment has remarkably outperformed all of them over the past 3 years. As a result, they've been featured on CNBC, The Wall Street Journal, Pensions and Investments, among many others. What's even more incredible is that they've been able to do all of that with an endowment that's a fraction of the size of their Ivy League counterparts. Now, Renee has spent the majority of her career growing the university's endowment. She currently serves as the managing director of investments. While she's involved in many aspects, she most notably oversees its private market allocation, which is roughly half of the portfolio. She also serves on the boards of the University of Texas Alumni Association Investment Committee and a fast-growing family office. Jin has been on the team since 2015, serving as the director of investments. She's worked closely with Renee growing the private market portfolio. Both are CFA charter holders and Baylor alums. As a Baylor alum myself, it makes me proud to see them represent the university so well and know that donor funds are being stewarded with their care. It was a lot of fun to go behind the scenes of their incredible success. Welcome to my conversation with Renee Hanna and Jin Dingmore. You guys have really been there for the transformation of all of that. You've watched everything from, of course, the football team having its renaissance, all the way up to Chip and Joe having their renaissance and bringing the world and turning it into a tourist destination now. But what has that been like, watching Waco become what it is now versus what it was, even 15, 20 years ago?
It's been phenomenal. I actually moved to Waco in the early 90s. We came from California. My father's job moved here. We relocated. So I grew up here. And so to see the change has been really amazing. And I also think the positive sentiment. If you look at when McLean Stadium was built, it was like a decade ago. Mm-hmm. And that's when the first season of Fixer Upper launched. So the last decade has been really pivotal for Waco. And just watching the Baylor and the community, just like the strength of that kind of get even stronger in that bond has been really great to see.
Yeah, I didn't realize the show started and the university opened the stadium the same year.
Yeah, 2014.
Man, that's awesome. Yeah, and Jin, you've been there for a long time too, except for your hiatus to get your MBA, right?
So I've been here since 2011. I actually have been living here since I traveled with the part-time program. So I traveled for my MBA on weekends. But Renee's been here far longer. But even from my perspective, getting to know Waco and Baylor as a student and as a professional and just seeing the brand of Waco / Baylor, like when I came to school, didn't know, not everybody knew where Baylor was. Not everybody knew what Waco was, or if they did, it was for a very different reason than like Fixer Upper or the Baylor brand. And so seeing that kind of also in tandem with my career, I think it's just really cool and rewarding as a Baylor alum too.
You guys have been part of some really incredible things at Baylor over the last 10 years here, of course, but really what we've seen in the last couple of years, especially in your office, has been something truly special, because what we're used to hearing is endowments at these major universities, these Ivy League universities that are producing incredible returns and then, of course, putting that back into the university itself. And at Baylor, I just know I caught some press not too long ago in the Wall Street Journal. I guess it was about a year ago now, but hearing the story about what your office has accomplished and then following up and seeing it on CNBC. And then I think Pensions and Investments had some mention on it too, but it's been catching some press for the work you guys have been doing. What's that been like? And Renee, when you were on CNBC, what was that? That experience had to be kind of a unique experience for you.
Unique for sure. It's definitely not a world that Dave and I are used to being a part of. But it was, I think every overnight success is 10 years in the making, right? That's the quote. Everybody lives it. And then things kind of start to catch fire and people start to give you that recognition. And so for us, just to have recognition for our team, we know we've been working hard and really trying to add value for Baylor and the endowment and the ultimate stakeholders, which are the students. And so to get recognition for that, it was pretty incredible, especially in such a great setting or a well-recognized setting like CNBC and the Wall Street Journal.
And you guys and of course Dave and the whole team have made us all as Baylor alums very, very proud to see all that. Over your tenure, the endowment has almost tripled in that time. Aside from your investment strategy, of course, we'll get into that, but what attributes do you think most lead and have led to that success?
I think that when I look back at it, I think one of the things that we've done really well is play to the strengths of the team. So when you think about Dave, Dave's been a trader in his prior life. He's traded everything under the sun. He's worked at hedge funds. He's worked in investment banks. And so he brings that mentality to the endowment as he thinks about the overall portfolio and particularly the marketable side when he makes trades. And so that's something that I think that we've done well is just look at who we have on the investment team and play to those strengths. And it's allowed us to be successful and, really lean into our core attributes.
Yeah, I 100% agree with that. Just like team is a huge part of it. Having the right people with the right strengths, but also just like the continuity. I mean, Renee's been here since 08, Dave's been here since 11, I've been here since 15. And also like our leadership over the years have done a really, really great job pouring into the junior talent. And so I started here as an analyst. I've worked with Renee from day one, always on the private side, and just like the mentorship and the teaching from both Dave and Renee. You're exposed to everything in the office, whether it's manager meetings or like big portfolio decisions. You're part of all of those conversations, which just can't happen everywhere, just by function of like team size and just the way the organization is set up. And so just the time and effort that they invest into the talent and cultivating this like continuity of team. It's a great place for younger talent to be. At the same time, like everyone carries weight, right? Every opinion and diversity of perspective is respected. And it helps, I think, practically, it helps cover a lot of the different perspectives that are out there because everyone looks at an investment opportunity or a question from a totally different angle. So having those different backgrounds, whether it's by, race, gender, generation, has been really additive to us, I think.
Mm-hmm.
Yeah, and it seems like there's a lot of investment in the people in the office itself, too. Beyond the investment strategy, looking at the people there and seeing that you're nurturing the talent and the relationships there. Would you say that that's accurate?
100%.
Absolutely. The day you walk in the door, you have a voice, you get a vote, you're traveling to all the different GP meetings that we're going to. You hit the ground running when you join the Baylor investment team.
And I don't get the impression that's terribly common.
I think oftentimes there's kind of I think the analyst is doing a lot of the grunt work and they don't hit the road until they're a little bit more seasoned. And our view is that all of these things help you learn. So you're absolutely going to be, running financial models for us and doing a lot of Excel spreadsheet work and financial analysis, but you're also going to hit the road and meet with GPs and hear all of those conversations firsthand, because I think it ultimately makes you better. And I think it helps you be even more additive at a quicker rate.
And you guys are both focused on the private investment side, which is nearly 50% of the portfolio, is my understanding. In that time, of course, the private side has really been robustly built out over these past 10 years especially. But you guys have a pretty narrow focus in that strategy and how you're approaching it. Tell me a little bit about your buy box. What are you looking for and how are you assessing these private investments?
There's lots of great managers, including ones that we don't have in our portfolio, but we can't be everywhere at once. I think by function of being a smaller team, we're able to be more nimble, but at the same time, up until a year ago, it was just Renee and I covering the entire spectrum of private investments. We now have added one more all-star team member with Kaylee. But I think we have to be narrow. We have to have a focus zone. And it starts with kind of high-level portfolio construction, identifying like the clear parameters of like where we want to be active in. So it might start as broad as like we think the lower middle market, it has the most inefficiencies, and just the math works so that the potential return can be higher. It's just easier to make a 3x on a $200 million fund than it is like a $5 million fund when you think about the absolute dollar amount. So things like that, it starts from like those parameters. We also dig into specialists, similar to how Renee talked about like our team players. We really lean into our strengths to make this like cohesive team. It's very similar to how we assess and get to know our managers as well. We then go to, the next level might be like asset class. It has something that we are locking up capital in a private fund has to clear the hurdle for what we can be doing on the public side and executing that same, expressing one thesis on the public versus private side. There has to be a premium for locking up your capital. So We choose to be active in specific asset classes. We choose specific sectors that have longer term secular tailwinds that are not as cyclical. Again, going back to that illiquidity factor, we can't time the markets on the private side. We don't have control over that. So choosing where we want to play in terms of, size, asset class, sector. And then of course there's a lot of like quantitative and qualitative manager criteria that we have when we're underwriting managers as well.
And I think this is a really good example of playing to your strengths. And I can give you some real examples. Emerging market private investments were really hot over the last decade, really. We've seen a number of other institutions make really interesting bets in different places in Europe, in Asia. And for us, we took a look at our team. We took a look at our bandwidth. We took a look at the opportunities and the liquidity. And we were just like, can you really execute this in the way that's required? Because we're talking to endowments that have staff sizes of 3x our team, more than that. And they're telling us how challenging it is. So are we going to be effective going and sourcing that boutique manager in a place where we don't speak the language, we don't have the connections like we do here in the US? And at the end of the day, we felt like, no, we're not going to. So if we're going to pick up EM exposure, it's going to be on the marketable side where it's more liquid, where we can trade in and out. And that actually allowed us to avoid a lot of the valuation declines that hit recently in parts of Asia, and just the lack of liquidity that's been there of late. So I think we were able to kind of sidestep that one, not because we're like super intelligent, but because we were like, hey, this is just not something that we're going to be able to execute well.
Yeah, that's right. You were prepared for it. Just in that case, that might happen. Now, I do want to come back to the managers in just a second here too. But when you're talking about where you're allocating, do you have certain percentages that you're allocating in different buckets to different things, VC, private equity, or different, I don't know, different sectors, whatever it is? Do you have that preordained, or are you organically determining that as the markets move?
We do. We start top down. So we start top down with how much we want to allocate to marketable and privates at a high level. And then we drill down to just speaking to private specifically, where we want to be within buyouts, what I'll call expansion capital, growth equity, and venture. And ultimately what we're trying to do is we want a really high velocity of capital. We want repeatable processes. And so when you look at venture, it's going to have a lot of zeros, high loss ratio, longer duration. And so we're a long-term endowment. We absolutely have that type of exposure in the portfolio, but we want it more muted, right? We don't need that to be 100% of our book. So that might be 20% of our private equity allocation. And the remaining 80% is going to be in those repeatable, higher velocity strategies, expansion capital, and lower middle market buyout.
Mm-hmm. And Jin, did you want to add to that?
No, I think she encapsulated it pretty well.
Yeah, absolutely. So coming back to the managers, you have to put a lot of faith in your managers. In fact, they are determining the success of your portfolio in many ways because you've selected them and you're in it for the long term because of the long duration of these agreements that you're in with them. Mm-hmm. So how do those relationships come to be? What are you looking for, both from a personality standpoint, from a relationship standpoint, and really from a strategy standpoint as well? How do those all come together?
Yeah, I think from a strategy perspective, again, we have an error box. We know what we're looking for. So it's we pretty efficiently get to market mapping the areas that we're really interested in and we really need to add to, that we're interested in adding to the portfolio. As far as criteria goes, there's quantitative, qualitative, there's business perspective, like their institutional quality, their track record, the viability of the strategy, how it aligns with our philosophy, like all those things that you would expect in a traditional due diligence process. I think maybe where we do perhaps a little bit more work is on the personal side as well. We put equal, if not greater, emphasis on it because these are, as you said, long-term relationships that you can't easily get out of either. So just really trying to get to know the managers as a person, even and particularly outside of work, their character, their motivation, their background. We do a lot of personal references, both that are given to us by the manager, but also just triangulating data. I mean, it's a small industry, but also we ask for personal references for each manager on somebody who they've known for 20 plus years, someone who they went to college with, their next door neighbor, to really get a sense of like, who is this person that we're partnering with and are they going to be doing the right thing at the end of the day? Especially in particular when things get bad, like you want to be partnered with the people who are going to respond and react and carry out their fiduciary duty in the proper way, both for all of their LPs and for our constituents as well.
That's really fascinating that you go that deep with the personal relationship side. That's got to take a lot of work, but have you found that the fruits of it have proven to be true with the managers that you've selected?
Yeah, we very much view our GPs as an extension of our team. If they win, we win. And so we really want to find people who we feel like take that partnership seriously and have really good alignment with Baylor University and its stakeholders. And so we go deep. We want to talk to your neighbors. We want to talk to family, friends. And ultimately, we want to be a good LP too. So one of the questions we ask our GPs is like, how can we serve you? What do you need from us? We're oftentimes making LP connections to other like-minded LPs. We're sharing information about different like brokerage relationships that we heard that could be helpful on the banking front. We did that during the regional banking crisis with some of our GPs, but we really want to be a first call to our GPs when things go right or they go wrong, or they're simply questions. And we're not going to do that with our check size because we're a $2 billion endowment. We're not a $60 billion endowment. So the way that we try to be at the top of that phone call list is just by being additive and creating a really strong partnership and alignment with the people that we invest with, and then backing them for a long time. We're not trying to, invest in fund one and step out. When we invest, it's with a lens that like, we're in this for the long haul. Like we want to be with you for the next several funds, which means like, the next 20 to 30 years, right? By all accounts, like these are really long-term partnerships.
So what does that process look like? You've opened up sort of the book on how you get into the person that you're going to be working with, but how does this process go from finding a deal, from sourcing the deal to making the allocation?
A lot has to line up, especially on the private book when funds are not always open. A fund may be raising, but it may not be the right timeline from our perspective in terms of our own allocation budget. So I would say the timeline really varies, from a couple months to a couple years, depending on, again, how things line up. And, sometimes you may just need more data or, going back to the strength conversation, like we found that we're really good with data and making decisions based on that. So if there's like a true fund one with a brand new team, we may not feel comfortable pulling the trigger quite yet. And so something like that might take a couple of years to get to know mutually. Whereas there have been funds that we've really liked, but again, the timing doesn't align. So it takes a couple of years. So I would just say it's a very fluid process, very case by case. In terms of how we get to that decision, again, we're a tight team. We're a team of 5 investment professionals, and we're constantly talking to each other. By the time something gets to internal IC, like we kind of all hashed out and talked about the considerations. We've gone back and forth. And then once our team kind of comes to a consensus of conviction, then we bring the recommendation to our formal board once a quarter.
You bring up the team element too. And you guys you work very well together, obviously. You have a great dynamic, just obvious in the conversations that we've had. But I'm sure that you don't agree on everything, but you have complementary skills. How do you leverage those with one another? And then how do you play off each other when maybe you don't agree on things and come to a decision?
Yeah, I like this question. One of the questions we've started thinking about internally, but also asking our GPs is, what is your superpower? And kind of seeing how they answer it across the team, especially, the GPs are going through these same decisions, right? So I would say internally, for us, when I think about Jin's superpower, she's like in pursuit of truth. So I know if she brings forth a GP that she likes, she has ruffled it to the ground. She has stayed up all night thinking about it. She has gotten to the nitty gritty of the details. And I'll let Jin answer. I don't want to, it's my superpower. I'm not super honest, right? But that's what I love about Jin, and what she brings to the table, I think, is a really nice compliment to how I operate.
It's so kind. I think Renee has a lot of superpowers. Again, I've watched her for 10 years since I started in the industry. So she's always been a great role model. And of the many, I feel like she's really great at saying the right thing at the right time, which sounds like maybe an easy skill, but it's truly not. And to be authentically herself while she's doing it, I think really lends herself to connecting with really anybody. I haven't seen her not being able to get along with or connect with people. And in an industry where relationships is critical, you've heard her talk about how she builds relationship and tries to be a valued partner to our GPs. I feel like she's very, very good at that. And then she's just like an execution machine, which cannot be taken lightly either. But I do think, just talking to each other about what we bring, like one thing that occurred to me is like, I see a lot of what maybe I wish I was better at or a skill that I don't have in Renee. And I think that kind of speaks to like how complementary we are. And we're actually like pretty different in a lot of ways on the personal side. But from day one, I feel like we just clicked truly. And I think it's just that like shared goal and the shared value system that we have working towards the same thing really just like unites us despite the fact that we're pretty different. It's kind of like, I guess it's a little bit of opposites attract. Um, but yeah, it sometimes we do, in that transition over the last 10 years, going from analyst to where I am now, we've had to be more explicit and intentional about how we pivot our kind of purview or responsibilities. But I feel like the key is we're always like really transparent. It's an iterative process. We tend not to take things personally. I feel like we both are in pursuit of that like intellectual and emotional honesty. We're not afraid to admit when we have thought about something wrong or, come to a different conclusion or changing our minds. And so we talk about disagreements. We both kind of smile because we've had a very recent decision point where we had very different approaches and at the end of the day, differing views on something. Mine was more from like a bottoms up perspective and Renee's opinion was more from a top down perspective. But, we acknowledge, again, all of our hesitations. It's all out there. We know where each other is sitting every couple of days. I'd be like, okay, how do you feel about this? Like, here's some things I thought about what you said. These are the valid things. Here's what I think, the factors that mitigate that. And you just have to sit with it, right? Like it's a team effort. Everybody has to be on board. Neither of us have, and I don't think we'll ever put our foot down and say like, you don't think this, but I'm going to do it anyways. And so, because I think we all want to do the right thing at the end of the day, we want to sit with it and wrestle it out with each other. And at the end of the day, as a unit, come to one decision, even if we started at opposing ends. I don't know anything else to add to that, Renee.
No, I think at one point I went up to Jen and I was like, so how are you feeling about this? And she was like, I'm not talking about it anymore until there was a critical meeting. After that meeting, we will regroup. Like, so we excited all. So, no, I think it's great that like back and forth, but sit with it. It truly is like, it's like, are you still thinking about it 2 weeks later or have you kind of moved on? I think that can be really telling about how jazzed you are about a manager or an investment from a conviction level and if it's the right fit.
Yeah.
I do have one fun fact though about Jen. So when Jen started, it was a 3-year analyst program. And at the end of her 3 years, which had been the case with some of the other analysts in our office, it was, we're going to help you find another gig, like in the investment universe. This was just how we were set up at the time. And since then, our thinking has morphed in like how we bring in analysts to the team. And it's more intentional about like mentorship and growing them through the office. But at the time, it wasn't. And so at the end of her tenure, I went to our then CIO at the time and I was like, so about this 3-year program, can we like make it not like we have to keep her? She cannot leave. And so Jen has completely revamped how we think about analysts because she was so great. We were like, yeah, we're not letting her go. Like she has to stay on our team.
Well, what a testament to what you guys have built too, just as a team, because it's very clear. I mean, just hearing the way you talk, your egos are checked at the door. It's all about working together and collaboratively toward your mission. And Jin, you elucidated that very, very clearly about you are aligned toward a common mission. And you have this endowment. You are responsible to a university, but beyond that, you're responsible to all the alumni and especially all the donors who are putting their funds in your trust, at least in this pool, to build it and grow it for the sake of the university. So how does that, I don't want to say burden, but how does that fall on your shoulders? How do you take that and that responsibility to move forward with this mission that you've been given in responsibility for the university and its continued success?
Jen, you want me to start? I think we all carry the weight of that in different ways and how we think about it based on our experiences. I think almost everybody on our team was able to benefit from higher education because of scholarships that they were given to get them through that. And so it's very meaningful to us. And I know we are always ultimately thinking about the stakeholders of the university and what it means to go from $2 billion to 2.1 to 2.2 and how that transacts to dollars in the pockets of students who need it. and it's life-changing. And so we take it very seriously and it's always top of mind. We have a very close relationship with the business school. We've all taught classes in the past. And so we want to maintain that connectivity to the ultimate stakeholders of the endowment, which are the students.
Yeah. I mean, when I first started, you said you don't want to call it a burden, but it was a burden, right? Like I could feel kind of physically the responsibility of like, maybe not now I'm not responsible for this, but as I grow in tenure in this position, just the weight and like gravity and the value of the impact that the consequences of your work has, whether it's positive or negative. It's a very real thing that I think you have to internalize and understand. But on the flip side of it being a quote unquote burden, it's a great motivator too, right? Like you know where the fruits of your efforts are going to go. And so it's like a great motivator to continue to pursue excellence and not to be an echo chamber, but just keep working towards that common goal.
Renee, you were mentioning the growth, right? Because as you're growing from 2 billion to 2.1 billion, that 0.1 is $100 million. That is a lot of money. And then you move it, you keep going up to 2.5, 10 billion, and you keep approaching your Ivy League counterparts who are, as you were saying, $30, $60 billion endowments that have a remarkable impact, a dramatic impact on the lives of the students at the university and for the continued success, of course, of the university itself. So how do things change as you're perceiving that growth and you're looking ahead to, you've already grown to 2.1, as you're looking to 10 and 20 and beyond? How does your allocation strategy change?
It does change. And I think right now we're in a really nice sweet spot with the endowment where we can continue to execute well within our buy box that Jin articulated, the lower middle market. We think there's greater dislocations in that space and we want to lean into it. As you get bigger, and based on, because we're always thinking ahead, and Dave is really, really good about thinking 10 years ahead and keeping us focused on the end goal and moving the puck as needed. We've started talking to our peers that are managing $10 billion. And I think that's really kind of the line in the sand. Like we can double to 4 billion and really continue to execute in a similar way. I think you can even get to 8 and it's probably still pretty similar. I think once you cross that $10 billion threshold, things need to change because, well, right now we can onboard a manager who's raising, funds 1 through 3, sub 500 million. Once you're $10 billion, in order to stay concentrated, you're going to go to a group that's raising $250 million to execute a small cap buyout strategy and say, this is amazing. I love your strategy. I'll take all of it. And a great GP is going to say, no, I can't be beholden to one LP, right? And so I think the game needs to change. You'll have to be a bit more creative in how you invest and how maybe, things might shift. So the answer is honestly, I don't know yet, but we will. And we're thinking about how things might need to change once we cross that mark. And honestly, it'll be a high class problem, right? Because the amount of dollars that we'll be sending back to the university will be game changing. So
that's right.
Let's hope we get there sooner rather than later and can address that issue.
Jin, did you want to add anything to that?
That was very well said. I couldn't agree more.
So thinking about all of this, you guys are professional investors. This is what you're doing day in, day out. And I think about other retail investors, other folks who are looking to get into private market investments. You've got your own experiences from this. You may be in private investments yourself. What kinds of skills or strategies or anything else like that could apply what you're doing to what a retail investor may want to do getting into this space?
Sure. I think, if I'm a retail investor and I'm trying to get into private investments, I would think about it in a way where there's nothing super special about private investments. At the end of the day, it's long only equity. One is liquid, you can trade it, you can get in and out, and the other is not. And so when you're evaluating these businesses, I would evaluate it in a very similar way, and then I would demand a premium. I wouldn't think just because it's private equity, it's okay to, satisfy a lower return threshold, but I would think about what can I get on the marketable side, and is this good enough? I think that's been a really good thing that we have fine-tuned here across the endowment and why it's really important for us to stay plugged into the marketable side, right? Because if Dave is looking at the financial sector and so are we, and he's saying, I can get X return, well, then we better do better than that. And we better do better than that by a wide margin because we can't get in and out and trade it as the market moves up and down, and it will. And so I think that's something really important to keep in mind as you're vetting private deals.
Also just understanding the nuance of when you're going to start getting capital back. I mean, it might sound kind of obvious, but it might take anywhere from like 4 to 5 years to get your first distribution in a private fund, to longer than that, to the tune of like 7 to 8 years if you're doing like early stage venture. And so just really trying to understand the liquidity profile if there are going to be off ramps, which a lot of times there may not be a super easy one, and just adjusting your liquidity expectations, which of course adds, more of that premium Renee was talking about. And then again, going back to people, like making sure you know who you are partnering with. I mean, it's a minimum decade-long commitment, which is very different from just like buying an ETF or a stock on the public markets, and just getting to know the partner, their strategy, and, understanding what you're getting into.
Mm-hmm. What personal lessons have you learned in the time that you've been working at the Endowment?
I mean, so many. One that I kind of defer back to, which is not super original, is just to ask more questions. I mean, I remember as an analyst sitting in meetings and listening and absorbing and like not quite tracking with what was going on, and just being like, should I know this? Did I learn this in business school and I forgot? Am I going to sound stupid if I ask? I mean, it's plagued with acronyms, right? Like even today, somebody will come around and be like, what does that even stand for? And they're like, oh yeah, it's like some industry jargon that we have no idea, right? And as you've been in the position for longer, you're perfectly more comfortable to be like, I don't get it. Like, help me understand. And I wish I would have had that same hat and confidence to say that day one.
Mm-hmm. I can totally relate to that. I remember, I don't think I maybe spoke a single word in a meeting for a very long time when I first started. And yeah, as Renee said, like so much learning. I mean, I literally grew up when you look at my professional career. I was thinking more high level, and one thing, being in this specific industry, which for me, I did not explicitly seek out. It was very serendipitous and kind of at the right place at the right time. And now I love it. And it's literally like a dream job for me. But one thing that I've had to learn over the years is learning to sit. We kind of talked a little bit about it, but learning to kind of sit in the gray and be okay living in the gray a little bit. I was like a math major, so you can imagine like every problem or question has like a distinct solution or a correct answer. And investments isn't like that. I mean, you can get to a good outcome, but it doesn't mean it was necessarily the right answer or the best answer. There could be 4 other managers that you could have picked who would have done just as well, or if not better. And so I remember towards the beginning of my career, Dave told me, like, at best in investments, you have like 60 to 70% of the information at best. And you have to learn to not only sit with that, but come out the other end with conviction and stand behind your decision and be, willing and ready to accept the consequences of that decision, which I think is pretty unique in terms of like a characteristics of, which industry you go into. I feel like it's a little bit unique, but I feel like it challenges you and it grows you a lot. And so that's been kind of an ongoing thing that I, to myself, have learned to be better at sitting in the gray and be okay with that, and still having just as much conviction as, a 2 + 2 = 4 question.
Yes, I would imagine coming from a black and white world, jumping into the gray has got to be a huge jump in its own right. But you guys are just awesome. I love what you guys have been doing at Baylor, and really, really, as an alumni, I certainly appreciate it myself. But you made us all proud. Thank you for all you're doing at Baylor University, and I hope we stay in touch.
Thanks, Matt. We appreciate it.
We hope you have enjoyed this episode of The Alternative Investor. If you found this valuable, please be sure to like, subscribe, and share. This show is brought to you by Honey Hive Capital Partners. Visit us at honeyhivepartners.com to continue your alternative investment journey. This recording represents the views and opinions of its guests and does not reflect the views and opinions of Honey Hive Capital Partners, LLC. Nothing in this recording, nor any communications from it, should be treated as constituting financial, investment, legal, tax, or other advice of any kind, or as a recommendation to buy or sell an interest with respect to any investment. We look forward to you joining us next time.